Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York. It is Monday, 27th day of July, 2015, and this is the Daily Report for Gold and Silver. After showing a little firmness overseas, actually trading to a high of 1105.02, we do have the precious metals, specifically gold, palladium, and platinum trading moderately lower on the day. Silver was up actually during the day, but we currently do have gold off about $5-6, 1093.37. We have seen a trade to, as I said, a high of 1105.02 and a low of 1088.69 on the day. Of course, depending on how you look at it, and this is the COMEX futures, which is up about $7, same price, 1192.80. The key difference, of course, is the fact that the COMEX is not accounting for trading activity that happened in Australia, what we would call overnight trading last night. High 1104.40. Low 1187.70, and as I say, roughly trading at around 1093 on the day. Silver also trading lower on the day, off about 10 cents, 9-10 cents, 14.55, high 77.6, low 56.5, and that, once again, that's because we are looking at the spot market. When we go over and look at just silver trading off the COMEX, that will show a positive move, but roughly same price, 14.52, low 14.51, high 14.74 on the day. More on silver in a little bit. Traders, of course, we are sitting short gold right now, short roughly at 1091, so call it $3 from this point. Our stop is above 1107, and really the rationale behind putting the stop where we did was the fact that we looked at this high right up in here, and our feeling was that as long as the market maintained itself below that particular point, we should be okay. Your stop should be somewhere around 1108, 1109. I would keep it rather loose, but the key is that on each occasion, and we've had a couple of occasions lately where the market has traded almost up to that point, it stalled. So we now have this market really trading in a fairly tight consolidated range over the last couple of days, in which we see it trading on the low end at around 1080 and on the high end around 1105. So truly a $25 range that we're witnessing. My sense is that we will see this market, which I believe at this point is in a period of consolidation, break to the downside. Obviously, that's why we've initiated short positions. However, we have had this market genuinely kind of whipsaw back and forth between this range with no clear established trend, at least for the better part of a couple of days. So traders, according to the news today, we heard that many of the hedge funds that were net long gold have either reversed their positions or exited their long, and we've got a lot of net shorts. We've got a lot of bearish sentiment out there. And one of the things that we want to consider, of course, is the fact when you have an extreme amount of bearish sentiment, that can signal a potential bottom in the market, and we want to absolutely be aware of that. But on a technical basis, when we look at this market, and to do that, to illustrate that, I've pulled up a monthly chart. This is of spot gold standard candlestick format. I put one fib retracement, and the fib retracement is really the entire rally of this last, what I'll call the golden bull run, which began mid-2008. Gold sitting at around 700, takes it up to about 1920. From there, we have had this slow decline in which over the period of 2012, 13, 14, and into 15, we've seen this market decline. Now, one of the key levels, I believe, has been 1156. 1156, simply put, is a 61% retracement of this entire move. And so the fact is, when we take a look at this market, and we take a look at some of the price lows over 2013, 2014, on each occasion that this market tested these areas here, beginning of 2013, here, end of 2013, beginning of 2014, here at the end of 2014, on each of these three occasions, what we saw in essence was the market finding support and trading back higher. However, even with it trading back higher, it wasn't able to move back into a rally mode. And then we had these series. If you look at these tops here, these highs here, you have a lower high, you have a lower high, you have a lower high, and we'll have to see here. But on the last 4 occasions, as this market traded in a consolidating range, really the overall characteristic of it has been as a series of lower highs. So when you get a series of lower highs as well as lower low, lower low, lower low, and now here a lower low, on a technical basis, you can't see anything except the fact that this market is going to remain under pressure. Now, it could certainly have a clip up. It could certainly even move up as high as 1250, 1300, and then slam back down. That's within this range, and that would still, as long as it had a high of below 1300, this last high here, you would still get a lower high even with that market move up. So traders, I'm not saying that we're not going to see any kind of rally in gold or silver, but what I am saying is that when we look at the technicals and disregard the fundamentals in the market, what we're seeing is a series of lower highs, a series of lower lows, and most importantly, a dynamic break below this 61% retracement level, really for the first time since gold actually trended higher. And that's why we're at this 5-year low when we look at it, because we've got to really go past this area, this area, this area here, and have to go into the bull run before we find a matching point or a matching low. And so for that reason, I think that there's absolutely no doubt that the pressure will remain to the downside. As I said, at any point we could see some kind of a rally. That's not out of the cards, but the bigger picture is lower gold prices. So traders, what about silver? Well, when we look at silver, it was interesting when gold was trading lower in the evening session, we did have silver actually trading higher. Now that wasn't to last, because we now have silver down pretty much across the board, trading at around 1455, and that's the one area we want to see if it holds, because if it cannot hold this 1455 area here, we really could see it breach back to these lows, and these lows were closer to $14 per ounce. So we'll have to see how silver fares. But as I said, I have not really actively suggested we take a position in silver, because my sense is dollar for dollar invested on this particular short play, assuming, of course, that this short play works out, I really believe that the profit is going to be in gold rather than silver on this particular play. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.